Hey guys, good afternoon, everybody. Today is Wednesday, July 13th. It is 4:30 right now. I have a mentoring session with Alexander today. So I'm going to go ahead and set this room up real quick. I'm going to send him the link and then we'll get started with this one-on-one mentoring session. So just give me a few seconds to set this room up real quick. Shouldn't take too long. I'll get this link sent down. We should be good to go. Looks good. Let me get this link sent out to Alexander.
Hello.
Hey, Alexander, can you hear me?
Yes, can you hear me?
Awesome. Yeah, I can hear you perfect. How's it going?
Good, how are you? I'm on my desktop version. I don't have a camera. Is
Oh
that okay?
yeah. Yeah, no, it's perfectly fine. Yeah, no, I'm doing good. I've been back testing that strategy I was going over today. Looks pretty good overall, but I'm going through like pretty much every month, making a spreadsheet so I can show you guys just so that we have like peace of mind when we take these trades.
Oh, nice, nice. First of all, I want to thank you for providing us this opportunity to have a call one-on-one with you. And I know it's like, extra for you, but you did it anyway.
Yeah, no problem. That's fine. Yeah, I do this for you and for everybody. Just I want to make sure everyone's on the same page because I know some people are at different levels. Some people are confused with certain things, and I think this is probably the best way for us to really have that one-on-one communication to figure out how to, bring you to that next level.
Yeah, I've been watching pretty much all of your videos, but sometimes like I figure out I want to watch it later so I can skip some parts that I have an answer like to the questions for sure. Because I understand everyone is different and everybody's level is different. So uh, actually, I saw the mentorship with Peter. We kind of were chatting a little bit about strategies that we're taking on, and we both agree that we should focus on V3s,
Mhm.
because it's a 1-to-1 ratio.
Yeah.
So I kind of have all my questions regarding V3s as well.
Yeah, no, definitely, yeah, and I think that's great because I think the V3 is like it's probably one of the better strategies out of the variations. I know the V1 hits a lot, like it comes up very often, but it's very unpredictable, and I'm sure you've seen it before, where you just it'll work sometimes, sometimes it won't. But for the V3, it typically doesn't work most of the time, as long as the requirements are met.
Yeah, I'm taking V1s as well, but like I think like since my um winning rate is not that high as yours, obviously, so it's a little bit risky for me to have this negative um risk to reward ratio. um Let me tell you a little bit of my experience because it kind of leads toward you.
Yeah.
uh so I started trading maybe like 2 years ago.
Hmm.
After the pandemic hit, our business went down, so like I was looking for new ways. and I started with options trading. And options trading, as you probably know, there is no like funding companies. You need to have your own capital to
Yeah.
trade. So yeah, I pretty much lost like around 20K in the first year.
Yeah, I started with options before too. Options is really risky. I feel like options is like a gamble, you know? You because the thing is, I feel like it's better or it's easier to identify like these moves, these directional moves versus, calling strike prices and stuff because you really don't know if price is going to reach that point.
Yeah, and the Greeks itself were like, yeah, a little bit too much.
Yeah, it's complicated. It's really complicated. I started with options and I didn't do well either. I lost some money, not as much as you, but I did lose quite a bit of money. And then I moved over to just normal directional trades, and then here I am with US 30 now.
Yeah, so yeah, I kind of took a break, and then like I took mentorship for options trading, and then it didn't go well as well. I I, I kind of like, okay, I need to take a break, and then um my mom actually, since the pandemic hit, she actually started future trading,
Oh, wow.
like swing trading. Yes, she had a doctorate degree, and she was doing different business. She had
Yeah,
a music school, and she started doing features, and she's like killing it.
that's cool.
And then and then like, okay, maybe I should try future trading, because it's completely different. It's kind of like similar to forex, because it doesn't move like options.
Yeah, it's more of a, I guess, structured move rather than.
Structured, yeah. Like if you go in a trade, you set your, like, I don't know, 15, 20 point stop loss, you take profit in 20 points. It's a little bit different from options trading, because when options, when the price goes up, your option price can go down because of the Greek. It's kind of like
Yeah, no,
so,
I agree. It's more complicated. It's a lot more work, and it's just I feel like it's a mess. Whenever I see, well, I have friends that do options too, and most of the time when I ask them if they really know what they're doing, most of the time they don't. They kind of just get lucky with those, with the opening move. It's like doing the breakout basically, but for options.
Yeah, I was following signals, and like I've tried like 3, 4 different groups, and I was like, okay, I need to stop doing this. I need to educate myself. I tried futures, and then my friend, actually, who lives in Vegas right now, he started like raving about forex. Again with signals, but forex. Okay, and a week later, I was going home and I saw your car.
Oh, in the parking lot.
Not it was you were making turn left to our
Oh,
apartment.
into apartment. Yeah.
Yeah, yeah. And
Mhm.
I was like, okay, let me check this. And then the forex, and I was watching your videos, and I like that it's completely different from what I've been studying before. Supply and demand, all that stuff. It's like everybody's speaking the same thing.
Mhm.
Um, and the point is that since I joined you, since I started following you, I kind of like being profitable. So yes, I failed verification, but I
Yeah.
never reached 20K in, like, in the month before, even though it's challenge money.
Yeah, I
So
know. And you find the consistency, you see that it's actually possible.
yeah, so it's actually possible. So I can follow, the rules, and I can be profitable, and I don't lose real money.
Yeah, it's better because you're capped, at whatever you.
Yeah,
You're not just going for an unlimited supply.
yeah. And yeah, basically, like I said, I want to say thank you that I found you, and your strategy works. My questions are kind of like not regarding how strategy should work.
Mhm.
I know I got an idea, the rules, the red flags. My questions are regarding when to avoid taking trades, because if after analyzing my metrics on both challenges, like multiple accounts, I realized I have a lot of like losses.
Mhm.
Yes, eventually I hit my goal, 20K or 2K a day, but I have a lot of like trades and I have a lot of losses.
Gotcha. Okay. Yeah, no, definitely. Do you have like a specific trade that you
Yes, if I can, I gathered pretty much like 5, 6 bad V3s.
yeah.
If I can share my screen,
Yeah,
I'll
sure.
be able to.
Let's see, I made you co-host, so you should have the ability to share your screen now.
Okay, I have a lot of windows. Okay, if I do this, you see my Telegram right now, right?
Yeah, looks like I can see it now. Looks good.
Okay, and good V3. Let me do the search. Okay. Oh yes, Peter told me that you told in one of your videos that during the London session it's good to trade GR 40 instead of US 30.
Yeah, yeah.
Yes.
GR30 is it's basically it mirrors US 30. It's basically just the German equivalent to US 30. It used to be GR 30, but they changed it to 40, so it's a little more less volatile, but it still moves pretty much similar.
Yeah, but the spread is lower, which I like because US 30 has 140 during London and GR has like 50.
Yeah, yeah, it's a lot less, definitely.
Okay. Do you still see my screen?
Yeah, I can see it.
Okay, so like a couple of weeks ago, I showed you V3, bad V3, and you told me that I should look at the pivots when it's spreading like this. It means that the move is strong and you don't have to trade against the trend, basically, right?
Yeah.
But yeah, obviously here's the bad V3s. So is it always a red flag when the pivots are like moving like this, or if the bias, because the bias was strong and I kind of drew this like support, what is it, resistance line. And I kind of like I thought maybe it's faked out and it's gonna go down because so basically if you can take a look at this, what would be the like red flags besides the pivots?
Gotcha. So for the bias, was the bias for a sell?
So yes.
Okay, gotcha. So I think the main red flag for this would be that the trend up is so strong. I know it's not typically one that we look at because we look at the bias, but looking on the technical side, you can see the pivots are very spread out. Also, the trend meter is green. I don't know if there was sessions around there. Did you have the session indicator on too?
Yeah, it's on. It was not, were not sessions.
That looks like it, yeah. Yeah, I don't see any sessions around there. So I think the main thing would just be that, and I'm not sure if, let's see, what day was that? Was that today or recently?
And no, it was July 12th, yesterday.
I 12th yesterday. I'm not sure if there was news that day. Let me check. July 12th. So it looks like there was European news around that time. I'm not sure if, do you know the exact time or the timestamp for that trade?
It looks like it's around 11:42.
Oh, 11:42 our time.
Yeah.
So around that period, I usually don't take trades for London. I typically don't like taking trades 2 hours before or 2 hours after because it has a lot of weird movements. You'll see a lot of the, just looking at your chart right there, you can see between, so if you go from 10 o'clock our time until, until midnight, that's basically like pre-market moves, kind of similar to like how the market moves for New York. Like we start at 6:30, but then if you look at the chart between 4:30 to 6:30, you typically see like unusual movement. So it's only from my experience from trading London session in the past, I typically found the markets move very weird between 10 p.m. our time up until 2 a.m. our time. So usually like a 4 hour gap. So 2 hours before, 2 hours after. It kind of moves similar to like how we do during the breakout. So you know how when the market opens, it has like a push to one side and then typically it'll correct back down. I'm not sure if that's what happened here. If price pushed up and then it came back down after. But usually that's like what I would consider like dead zone time, like where I don't trade London. I don't trade London anymore, but from when I used to trade London, that was usually where I didn't see a good time to trade. Like what I would usually do is I would take a nap during that time. I'd nap from like 10 until 2 a.m. and then I wake back up and then I just trade from 2 a.m. our time until New York open.
Okay, so basically, even if we see the trade, we should avoid certain hours and basically like stick to
for London. Let me pull it up on my screen too. I want to see what it looked like around that period. So
I'm trying to find it.
Yeah, so I can see. Let's see. Yeah, if I'm looking at the same time as you. So the thing with the DAX too is that it's the bias with this is a little more difficult to follow compared to let me check the bias.
Yeah, bias for like 63.
Oh yeah, I see it right here. So yeah, it was around like in the 60s range. So you're right. It was the
64 long, yeah.
Yeah, the retail sentiment was in the 60s. So overall bias was for a sell. I'm just looking at the chart right here. It looks like it was pushing up around that period, like you mentioned, and then it looks like after it just came straight back down. I'm not sure if you're looking at it on your screen. What time frame are you trading on? The 1 minute, right? Yeah. So I'm looking right here. It looks like it around that period, or pretty much right where you marked it up. It established the high, and then from there it corrected back down. Do you have the chart open on your side? Because you can see
on my second screen, I'm trying to find this area. July.
I think it's
12, 23. 40. Why is it? It looks different.
I think here, let me look at your chart again. So on your
45.
chart, I think that was like 11:45. Oh, I could kind of see it on yours. So I think your entry right there came up around. It looks like it's 11:40. So if you look around that period right there, 11:40.
Yes, I have here. July 12th, 11:40. Looks different.
Let me see.
I don't know why.
I think it's around. Yeah, I see it on my screen right here. It's like at I think your entry was at like 23, July 12th, 23:45. It's around that area.
Okay.
Yeah. So basically, if you mark up, so if you just mark up the times, like what I would recommend is go from your chart and then just put like lines at midnight, which is 0, 0 is like basically 0. So
like
put
vertical line.
Yeah, exactly. Put like a vertical line right there, and then put a vertical line at 2200. So you'll see around that period, the market moves kind of irregular. So if you look from 2200 to midnight, it moves a bit irregular, and then you can put another line at 2 a.m. and then look from 2 a.m. up until New York, and you can see it's a smoother push down.
Oh, you mean like even this area is not good for trading as well, from midnight till 2?
Yeah, so basically that whole gap right there, if you draw it on your chart, you can see it a lot better. Like it's like a illustration of like how the market moves irregular. between 2200 up until midnight, you can see it's not very directional. It kind of just goes down, goes up. It's like a big range. And then from midnight up until 2 a.m., you'll see that it has the initial direction, similar to when we trade the breakout. It has the first direction to the downside. And then after that, it swings back up. But then from 2, check from like 2 until 6 a.m. basic or 6:30. And you can see that it has a more smoother push to the downside. So on my screen over here, I'll send you a screenshot of this too so that you can see as well. Let me clean this up.
To me, kind of like this one looks more directional than this one.
Oh, from the
from like 12 a.m. and kind of like
yeah.
down.
So 12 a.m. is kind of similar to how it is from like 6:30 to 8. That's usually the time that we trade. But here, let me go on the higher time frame so I can just mark it up for you so you can see it a little better. So let's put something here. Let's see, this is pre-market. The thing with yesterday's market is we had the inflation news around like 5:30 a.m. So you'll see that it was moving smooth until it hit, and I'll put an arrow where the news was. I'll take a screenshot of this and I'll just send it to you. So I sent you a screenshot right there. You can see from the pre-market, it moves a little irregular. It's kind of a big range. And then from where I said open, that's midnight up until 2 o'clock. But you'll see like between, you'll see how the reversal happens. It's basically how we trade during New York session. Initially, it'll have an initial direction and then it'll correct back up. And then mid-market, that's usually where I started trading when I would trade London, because you can see a smoother push from 2 o'clock up until news time. Yeah, did you see the markup that I sent you? It's,
yeah, I'm looking at it.
So it's pretty much smooth from like 2 o'clock up until where the news happened. Right there.
So this one is smoother than this one.
Exactly, yeah. So that's usually where I would trade. The only time I would stop is right there where I have the arrow, because that's when the inflation news came out.
When you look at this and when you look at this and this, by smoother you mean because of the wicks are lower or because of the so I thought this one is more like a directional, which what we need to trade.
Yeah. So
but when you say smooth, that means it's not like boom boom like up and down, right?
Exactly, because the volatility, the volatility is so high, because you can see right there where it has the spikes. A lot of those times it can swing up and just stop you out before it comes down. Yeah. So if you look right there in mid-market, you can see there's probably a V3 right there where that green candle points to the high. That's probably a V3 and it's a smooth one down. It goes straight down with no drawdown. And then probably another one right there where it wicks up as well.
Where I see this one.
Yeah, probably that one, and maybe the one right to the left of that where it has a green candle with the wick. Maybe that.
Oh yeah.
That looks like that might have been a V3. And then maybe a couple like V1s as price continues to go down a little further.
Okay.
Yeah. So this is
then I should just stop trading London then.
Like London, like I found like some luck in London, but it wasn't like worth my time to like stay up, because what happened was I would trade London and then by the time New York came around, I'd be so tired because I'll be up from like 2
sure.
Yeah, so I'd rather just focus on like New York in the morning. Just have a full focus for an hour and a half and maybe catch 1, 2, 3 trades and then just call it a day. I found like
maybe.
Oh, go ahead.
Yeah, maybe that's a solution for me for my next one of my questions, how to avoid over trading and
Yeah,
and
yeah, yeah, exactly. Because that's the same thing with me. I had the same issue. I think over trading really got the best of me, and that's what. Because sometimes I would make, well, usually I would make all my profit during the live session, and then after that, if I continue trading after 8, I would take maybe 1 or 2 losses, and then I'd be back to break even, and then from there, it's just, you know,
yeah, if you, I mean, remember I told you I was up again,
oh yeah,
uh, and then take a look at the lots. So I
wow,
know it's a problem.
yeah, I took 37
And
trades.
yes, and the challenge that I passed, yeah, I passed it, but same issue. You see,
Some days
like,
you have a lot of trades, yeah.
yes, yeah, it's overall green, but it's not that big, 226 trades.
Yeah, it's like you had a back and forth. You won some, then you
Yes, that's the problem. Back and forth. That's why, kind of like I say, I know how to, identify the like three trees and avoid red flags, I
Mhm.
would say. But that's why I gather like more examples when like the bias is right and everything is right, and it didn't go well. If I can share more examples.
Yeah, yeah, definitely. So the way that I choose my trades, and you probably noticed it too, like I typically only take trades when there's like a lot of confluences. So having the overall bias and the basic requirements, that's like the first step. But if I see 2 entries lining up, like say there's 2 strategies for 1 entry point, um, that's typically the one that I would take. Like if we already have like a big trade running on the 10 minute, say like a daily entry, and then we have a pivot scalp within it, or actually, I don't even apply the pivot scalp very much. Say like a V3, but there's already a V3 running on a higher time frame. That's where I'm more confident with taking it, because we already have a direction. So you're basically trading
Yeah.
trade.
Mhm. That's kind of I was noticing and trying to apply for my um, trades as well, because let's say if I'm looking at 1 minute and there is a pending signal and the V3 is setting up, but on the 5 minute it's the opposite momentum signal is pending. So I'm kind of like, okay, I should not do it, right?
Yeah, exactly. Yeah. So that's one way to do it too. So the way that some people do in the group is they will look at the trade, and if there's an opposite trade running at the same time, and then say there's like an opposite V3 for a buy running on the 5 minute, but you have a
Yeah.
V3 running for on the 1 minute opposite way, you probably want to maybe just ignore that one. And then that's a
Hmm.
little bit harder because it's more of an advanced way to look, because some people can't look at multiple charts at once. But that's how I would look at it. I try to take trades that have nothing conflicting with it, because one conflict could mean the difference between winning or losing that trade.
Yeah, that's 100%. Um, okay, let me show you one more bad V3. We got that one. Yeah, I kind of did comment myself. Near session candles, the big prices in the range periods are crossing. So this probably was obvious. Some of them I did not take. I
Yeah.
kind of like gathered to ask the question.
Hmm.
Um, so since you mentioned pivots to me, it's kind of like breaks my mind, when I see this spaghettis forming. I was like,
Yeah.
is it reversal? Is it continuous? Is it fake out, fake like this up and then continues down? And
Yeah.
it's kind of like really stresses me out.
Yeah. Yeah, because it's hard to tell sometimes when you're looking at the pivots, because you don't know if it's going to reverse or if it's going to, continue up. And I can see that entry right there that you marked up. I can see where the confusion is, because you see the big red candle and it looks like, okay, it's probably going to come down. The main red flag for that one though would be the session. So you can see that purple line. There's a session, I'm
Hmm.
assuming.
Hmm.
Uh, Whenever it's close like that, and I see like it's like you have to, like, if your price has to pass it to get to your TP. I typically don't
Yeah.
expect it
Hmm.
to. to continue pushing up. It looks like even right there was a double bottom for those two the high low and the low next
like
to it.
triple bottom or
Yeah, like a triple bottom. Yeah.
mm-hmm.
I know we don't really look at those patterns, but I also use that sometimes to identify, whether this might bounce. Because if you have the triple bottom there, plus you have the session, that's like double confirmation that price is likely to, bounce off it.
Mm-hmm. Mm-hmm.
Yeah,
that's right.
So I think that'd probably be one of the main things for this trade specifically.
Yeah, this trade was obviously not a good one. I didn't trade that for sure. I mean, probably the screenshot I was taking is because the pivots are, here is an example, like let's say overall bias is for sell, right?
Mhm.
And then it goes up and it's kind of like, crossing. And like you said, we don't know if it's like reversal up or it's still like, pushing down. So
yeah.
can we take this one? Here's a V32, right?
Yeah. So for that one right there, what I would do is I would mark up. So you know how you have your TP marked up on the last one? I would mark up the TP and see if the TP is past the pivots. So if it's
like
so
here, right? TP is like around here.
Exactly. So you see how the last one that you drew, it's like so far past the pivots, like way below it. Not that one, but the one only to the right. Yeah. See how the TP is like far below the pivots. That one would be a little more dangerous compared to the one that you showed me in the middle, because it seems like if you were to take that, the TP would be somewhere in between the pivots, like somewhere around that area, right? And you can see right there where price pushes down, but then it rejects at the bottom. So it's like far enough for you to at least hit your TP before it bounces back up.
Okay, good point. Another so I've lost a lot of trades when there is a move like this, like green, 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 and then one red candle, pivots are below, and TP would be above the pivots. I would enter and it's like pushing higher.
Yeah, it just keeps pushing higher, right? That's usually when so whenever I see an entry like that, like the same exact setup that you have, I would avoid the first one. So say for example, right there, I see there's two entries. See how the first one right there, that one looks like it might have hit.
Something like this, right? Avoid the first one and kind of like on
then take the second. Yeah, exactly. Yeah, so that's
what I'm noticing too.
Yeah, because I always get issues like that, or you'll see on the live sometimes. Like we'll see one entry, and I'm like, okay, I'm gonna skip the first one first because I want to confirm that it's actually coming down before taking it. So if you skip the first one, then that one hits, like the V3 hits TP. Like, okay, it's probably going to reverse. So you can see that first one that you marked up. That one you could have skipped it; it would have hit TP.
And
that one,
the second one.
Yeah, the second one's the one you would have taken,
even if it were higher here, right?
Yeah, because at that point, it typically it kind of shows you a confirmation of a fake out. So like say if you took the first one and it faked out, it swung back up, and then now in that second attempt, it's actually making the full-on reversal or correction. I guess this one would be considered correction because it's in the direction of the overall trend, or not the overall trend, but overall bias. And that's just something that like you'll start to notice that. Like there'll be fake outs. There'll be like one time where you think the reversal or the correction is coming, but then it keeps pushing up a little bit higher. On that next attempt, it actually does come down, and that's basically what happened right there.
Got it.
Yeah, market's tricky. I mean, I only see this because I've been looking at the chart so often, so I see these patterns without even thinking about it. But then for me explaining it to you, it just reminds me that it's something to look out for.
I think I have it somewhere, but let me just go to the next one. Yeah, pivots again, it's like confuses me. So
yeah. A lot of times I just turn off the pivots sometimes because it does confuse me too. Because it sometimes it makes you second guess the trade. Like if you're looking for one,
Mhm.
It kind of makes you not want to take it because it looks like it's not going to go in your direction. I think there's another example there, like what I just talked about earlier. Unless that's the same trade. Is that the same trade?
I think it's different
Different?
one.
Yeah, because it looks like in the middle, it has that thing where it has the first entry that we would probably skip, and then the one
Oh
next.
yeah, that's right.
Yeah,
That's right. It's the same one.
yeah. I think this is just a screenshot a bit earlier.
Probably this would be the example of entering on the second candle, right?
Yeah, yeah, exactly. Because you can see the first one, but it does hit TP. So you would skip the first one, it would hit TP,
Yeah,
confirm that.
it hit TP after that, but stop loss was too small here. Or I guess I
Go for the
should
entry.
have been entered here. I should have entered on the second one.
Yeah. Yeah. Typically, when you see price pushing up like that, like the opposite direction, I would just skip the first one. And then on the next one, that's usually the one where you're going to have the better push where it has like no drawdown.
And here we should ignore this, right? The pivots. It's kind of like not
Yeah. It's all,
directional.
yeah, it's all messy. It's too all over the place.
Okay. Mhm. Yeah, so I see these a lot. Probably the answer is the same. Enter on the second one at least. But any other flags that I should take a look? Because pivots are like on the previous example, kind of like doesn't matter here because it's kind of moving like up and down, up and down.
Yeah. I'm
But
not sure.
why shouldn't be? Why is it bad entry here?
So for that one right there, let me see. I'm not sure if do you ever mark up like opening price and the news price? Because I know London has their own, news kind of similar to what we do during US session. So I'm not sure if there's any other structures there that should be maybe avoided. Uh,
Mm. I usually mark up open price and I check news, but
yeah, I think that time right there. So looking at that entry, just looking at your timestamp on the bottom, it looks like it's at
mhm,
midnight. So I think that's probably a time that I would maybe avoid some trades because
yeah.
it's you have that breakout movement where it kind of moves one direction. So that might have been what
Mhm.
happened there. So at midnight, at where it says 12, looks like it pushes up, and then maybe after that, it finally did come back down for correction.
Okay. Because I thought like pivots are spreading, and I thought like it's gonna spread like it usually is spreading,
Yeah, and then
and
it does
then
the
it's
complete
like
opposite. Yeah.
okay, I think I'm one or two left. Well, we didn't cover this one. What did I comment on? No, I did not comment. I guess candle is too big.
Yeah, I think the candle was big there. Did that lose or did it win?
It lose. I lost.
It kept going. Yeah, I think that was too big, and I'm not sure if the stop loss too close too.
Mm,
Because I'm not sure like what the minimum stop loss would be for or yeah, it'd be like 300 pips, right? Because I see the stop loss is like past it.
mm-hmm.
Because like
Okay.
typically it needs to have a minimum of 300 pips.
Mhm.
So I think for this right here, for one, the candle was big, so you can see how price retraced up. You could have probably tried to enter this later. So you could have waited for it to retrace. You can see that second green candle that pushed up.
Mm-hmm.
And then from there, you could have waited for it to come back down. And then you can make your late entry. Or, if price never came back down, you would just never enter it. And then you wouldn't have suffered a loss there.
Yeah.
Yeah, sometimes it's kind of hard to tell when it's a big candle or not, especially when you're trading pre-market or like near open. That's kind of where the market starts to move very quickly. And you'll start to see how like those candles there, like if you go back like 10 candles, you can see they're really big candles. But before that, the candles are very small. So you can see it starts to move a bit more erratic as it gets closer to open.
Yeah, I think it just messes up with my mind. Like when I see this like candle, I think it's gonna like push with the red momentum signal all the way down.
Yeah. And that happens with me too a lot. Like, I'll insert trade before I'm supposed to. I just like sometimes I'll be counting down the last 10 seconds. I'm like, okay, enter it. And then when the last 10 seconds, price just goes complete opposite. I'm like, wow, should have just waited.
I think this is the last one. So I guess here is just been really price overextended and then kind of like corrected back up, right?
Yeah, that's what it looks like. I think that's the same thing that we marked earlier. You had like that initial direction, kind of similar to the breakout, and then it just corrects back up, back to opening price. And then it probably comes back down after.
Okay, well, so when I see this, I should, what should I see here, because I thought it's gonna like, at
Come back
least
down.
create like, triple bottom here.
Yeah.
Because,
So
the move is strong, pivots are spread out.
yeah, and then it pushes up. So what
That's
I
why I'm saying like, sorry, that's why I'm saying like, pivots are like fucking with my mind.
Yeah, I would probably just turn them off because I know that they kind of screw with my mind too. Because when you see them spread out like that, you think it's going to keep dropping, but realistically, it's already overextended. Because if you look at the where the pivot started to spread, it probably started to spread maybe 2 hours before, an hour before that, like right at the top there, like near where it says UTC7 at the top of your chart. Like you can see how the a little higher from there to the left, you can see where the pivots start to spread right there, right? By the time it gets to the bottom, it's like super overextended.
Got it, yeah.
And then whenever it's overextended like that, you should always anticipate price to retrace. So when price starts to retrace right there, you can see that first, or basically the V3 that you marked up, not that one, but that one right there. The same thing that we discussed earlier. When you see the first one, skip the first one first. Make sure that one hits. And then if it hits, then you take the second one.
Yeah.
Because if you did that, you could have avoided that one. And then you would have just waited for that, the actual entry.
One of my questions are regarding this. Whenever we see this really overextended push,
Yeah.
and the bias is not for sale, but we see this perfect V3 forming here, we should still avoid it, right? Because of the bias.
Yeah, I mean, for me personally, because I'm very conservative with my trades, I would probably avoid it. I know some other people would actually take it, especially if you see something very overextended like that. I know some people do take it. I personally wouldn't take it, but I've seen other people who do take trades like that. They look for the reversals usually. I trade like that sometimes too, but not anymore. I used to wait for, like, I would wait for the price to be overextended, and then I would look for a variation to reverse back at least for one trade, and then I would typically take it. But it's a risky way to trade. I don't think people should do that unless like you're really familiar with identifying the reversal. It's kind of similar to the strategy that I was going over today, where I look for the rejection off the low, because it's basically a reversal pattern. Like
you mean in the morning?
Yeah, the one where
I was not in the morning today.
Oh, okay, gotcha. Yeah, so basically, there's a strategy that I've been testing where I'm looking for a wick rejection off the low. So, and it basically is a reversal pattern, and I just take a push away from it.
Got it.
Yeah, I would probably just turn off the pivots and then just turn it on when you want to have a confirmation. Just use it like as an extra confirmation, but I probably wouldn't keep it on all the time because it may confuse you.
Yeah, I should probably do that. We covered this, we covered this. Um, here's kind of like question slash. I know there is a red flag saying we should not trade in range.
Yeah.
Um,
Yeah, when it's a big range, like you mentioned there, I think the big range is fine. But if it's too close, like say for example, your TP is going to be outside of the range, that's when I would avoid it. But if the TP is like within the range, I think it should be okay in some instances.
Okay.
Because a lot of times they'll retrace up to the top of the range, and then when it, you get entries at the top, it pushes back down because it needs to reach the bottom of the range.
Got it. We kind of covered this. Yeah, kind of more psychological question. After analyzing my metrics, I see that I tend to close the trade earlier in profit, but before my TP. So let's say I go in a trade and it goes in a drawdown, and then once it goes to profit, let's say my TP is $1,000, but when I see like 600-700 and I see it's struggling, not like it hit right away, and I see it struggling, I close it, but then it eventually hit it. Any advice how to like, I don't know, set it forget or
Yeah, it's a common issue with a lot of people that for some reason, everyone knows when to close the good trades early, and they know how to let the bad trades go to stop loss. Just like you said, I think it would probably be best if you just treat them all the same. I know it's easier said than done, but that's the only way that you'll start to trust it more in you. Because I know sometimes, like, if the only time I would close it early is if I get into a trade before or if I get into a trade and not all requirements are met, or if I start to see red flags coming up, like it's getting close to a session, or it's getting close to news price or opening price. If there's nothing there really indicating that that the trade's not going to work for you, then I would just pretty much then forget it.
And same if it goes in a drawdown and you see some red flags or something like that you don't like, you would pull up before stop loss.
Yeah, exactly. So like, or sometimes if you enter a trade and say you entered and not all the requirements were met, right? Say you entered and the overall bias wasn't in your direction, or it was too close to a session, or it's too close to one of the red flags, or the candle was too big. That was like something that I would possibly close early because it just didn't fit all the requirements that I was looking for. But if it does fit all your requirements, you would just need to trust it and just leave it alone. Typically, when that happens for me, if I'm taking a trade off the live, and you'll see me sometimes, like I'll take a trade, and the way that I ignore it is I'll pull up another chart and I'll just analyze something else while I let that trade run. So it's easier for me because you can just walk away from the screen. Like I can't just take the trade and then step away because people wonder where I went. So yeah, I think that the best thing for you is if all the requirements are met, there's no red flags, just take the trade and then maybe just walk away from your computer for a bit, come back like in a few minutes to see where it's at. Because the more that you look at it, the more nervous it'll make you, and it's the same feeling for everybody.
Got it. The last question is like, how do I properly identify a trend if, like, let's say 1 minute is showing uptrend, but on the 5:15 it's a downtrend, and we are looking for trades on 1 minute? Should we
I would
prioritize the 1 minute?
Yeah, I'd prioritize the 1 minute. So what I would do is, if you want to open your chart, I don't know if you know how to use the parallel channels. Have you used that before?
No.
It's like an easy way to identify the trend. Like if you use the parallel channels, you can, so let's see if you can pull up your trading view. Yeah, so basically the way that I would do it is, so say for example, the chart's kind of like choppy right now. But say, for example, right here, you're trying to identify that price is in an uptrend. Like I would just draw a channel right there to identify where the trend is. Like I would manually draw it. So open up your the drop down tool where your trend lines are. Take a drop down. Yeah. Click on the that trend line tool on the top, the second one on the right side. It's gonna have a drop down with all the other tools, and then it'll say parallel channel.
Oh
So,
yeah, I've
yeah.
seen you doing this.
Yeah.
Oh,
So I would manually
okay, got it.
draw it to the upside so that you can see where the trend is actually going. Oh, you should probably want to turn off. Oh, yeah, you can do like that too. So I would do that. I think this is the best way to really see how the trend is moving, because you know the pivots are going to confuse you because they're always crossing over each other. And then same with the trend meter, right? I think the trend meter is probably a better indicator with identifying where the trend is moving rather than the pivots. The pivots just show you how strong the trend is, but I wouldn't use it to confirm, you know, the trend because price can easily swing up and down from it very often. So this is typically how I would do it. I would just draw it myself. And then if you see price break below, then okay, it's going to kind of indicate that price is reversing. So you could even do it the other way. So see right on the left of where you drew that channel, you have like a higher high, and then you have a lower high right there. You can just connect the channel from there, from that higher high to that lower high, and you can see that that's when the trend started to shift. Like when it started to shift to the upside. You might want to turn off the magnet tools. I think the magnet tool is probably what's making it hard to draw it. Yeah, there you go. And then if you just extend it, so like see where that lower high is, just extend it lower so it goes to where all the candles are. Go to the top right, yeah, right there. Drag that down, just so you can cover all of the candles basically. So yeah. And then you can and then you can see right there where it starts to shift, right? So if you were looking for a sell or for a buy right there, you can see that price starts to shift at that point. You're like, okay, this is probably where the reversal is happening. Or yeah, because it breaks right above it.
Got it. So yeah, so the answer to my question is like even if it's 5 minutes like going down the 1 minute and we're looking trades in 1 minute, we should take a look at this. This is an uptrend, right? Doesn't matter what's going on 5, 10, 15 minutes.
Yeah, exactly. You want to focus on the 1 minute because the 5 minute, it does matter, but you're looking for the quicker move because the 5 minute candles are going to be a lot wider. So if you're looking on the 5 minute, I mean, it's still going to line up a lot most of the time. But
yeah, but like here, right? Obviously, this is a downtrend still, right?
Exactly. Yeah.
It's like it could be a small correction and all the way down, but on 1 minute it's uptrend.
It's a lot more active. Like it shows you where it's actually moving. Because if you're on the 5 minute, you could have connected those two higher highs. See where the higher high is. You could have drawn a channel there, and then that would have it would have made you think that okay, price is probably still going lower. But it wouldn't really matter because if you're trading on the 1 minute, like the range between those channels are so wide that you're probably gonna hit your stop loss before you can reach your TP. Yeah,
got it.
Yeah, so for scalping or whatever time frame you're trading on, I would just stick to that specific time frame when analyzing because it's not going to make a huge difference, but it will. It'll make a difference if you're looking for the long-term move. Because if you're on the 5 minute, you're probably looking for maybe a 500 pip move, right, versus a 300 pip move.
Yeah.
So it's probably gonna hit your stop loss before it reaches your TP if you use that.
Got it. I think that's it for me.
Yeah, I think for your pivots, you should probably just keep them off and then just use them if you want to see how strong the trend is moving for you. Because I do see a lot of people get confused with the same thing for you because a lot of people depend on the pivots to identify where the trend is going to start, but sometimes it'll just keep overlapping. So if it keeps overlapping, it's going to confuse you even more because you're like, okay, is this going up or is this going down?
Yeah, I was not looking at them because it's not even in rules for strategy, right?
Yeah.
But I kind of like did the bad V3, and you mentioned that, oh, take a look at the pivots, the move is strong, and I started looking since then, and it's like really messes my mind. It's like it's
Yeah, it makes you kind of second guess it. You might want to clean up the momentum indicator too. So go to your momentum indicator settings and you can turn off the shading. So go to that where it says plot on the bottom. Just uncheck all of those.
this one.
Yeah, just uncheck all of those right there. And then and that one right there too. That the plot's background. And then it cleans it up a little bit because you had like a little shade behind it.
Okay.
Yeah. Yeah, I try to keep it as clean as possible on my end because I don't like having too much. It kind of confuses me.
Got it. Um, I think that's it. Um, I kind of like probably know the answer to it, but to not overtrade is probably I should not do London any other time of days and just trade with you 6:30, 8 a.m. at whatever we do there. Just even if it's loss or win, doesn't matter. Just stay within that time frame because the market is kind of like
Yeah,
different in different time of the day, right?
yeah, I agree. And that's why I found, the 6:30 to 8 time to be perfect. 'Cause that's the time when you have the most volatility. I know the market's been kind of crazy lately, because it's summer and then also a lot of things going on. But typically, it's usually the smoother part of the market. So if you do want to trade, I would just focus on one session, whether it be New York. If you want to just keep trading London, you could do that too. But I think with regard to our schedule, because we're usually up normal time. I mean, your schedule is probably all over with the baby, but
Yeah.
I think if you could just maybe focus or have enough focus around that period, just a live time, I think that'd probably be best. Because the thing is, if you like I saw your metrics too. It looks like on some days you only have like 3 trades, and they're like perfect. You have like almost 3,000 profit, but the other days you'll have like like 300 trades, and it's like it's kind of all over the place.
Okay. Yeah, I mean, of course, I have a goal, 2000, right?
Mhm.
Whenever I hear it, I stop trading.
Yeah, yeah, and sometimes
Um,
I know sometimes you end up like
but sometimes it's like 8 trades and then almost 20K.
yeah, because you just end up stacking on the losses. But for the most part,
Yeah,
you're very consistent, except for that day with 36 trades. Looks like the last couple of days you had a lot. You had 28 trades, 26, 36. Um, but yeah, you probably want to bring that down to maybe under 10 trades. If not under 10 trades, once you get really good, under 5 trades a day. Um,
yeah. I should probably like have a rule, right? Under 5 trades.
yeah,
Because anyway, we don't do any more than 5 for sure
yeah, I
during
think
the morning.
Yeah, I think anything less than 5 would be fine. And sometimes you just have to accept red days, right? So like if you have a loss for a day, it's okay to just not trade. Because for me, like the way that I see it is since I rarely lose trades, if I do lose one, I know that the market is probably not working in my favor that day. So if that happens, I would just call it a day and I'll make it back the next day.
Yeah, I couldn't stop yesterday. So this was my second day. I made 1300 and then I said, okay, let me take one more trade and make it 2000, right? And
Yeah,
then it's like boom, 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 boom. And I was
yeah,
like, okay, I'm break even, but I was there. And
yeah.
then it's like,
And then you started to revenge trade from there because you wanted.
yes.
Yeah, that's what happens with a lot of people. Like once you start losing like maybe 2 trades, it becomes more greed, right? Because you just want to come back and profit for the day, and then you just end up going into a downward spiral.
Yeah, 37 trades. That's
Yeah, it's a lot of trades compared to the day before where you took 8. It's like triple the trade.
um Okay. Yeah. What about the pair, like Forex pair during London? It's still not a good time from 12 a.m. to
So,
2 a.m.
so for the intraday trades, I just take the trades whenever. Like if I see something good, I take it. It doesn't matter what time because it's an intraday trade. So you're gonna expect to hold on to it for a while. Um, Depending on like what are you scalping on that or are you taking
Yeah, scalping. Same strategies
scalping?
with
Uh,
Reese. Yeah.
so I can't really say for GJ. Because the thing is GJ works best around those times that we avoid for US 30. So like around those times, it moves differently. It actually moves in your favor because you have volatility during that period. So for US 30, there's not really many times where I avoid it. The only time I avoid it is like during the swap, which is I think 1 o'clock or 2 o'clock our time.
Mm-hmm.
And that's the only time I really avoid it. But I think anything outside of that is fine because it does move a lot slower. So, and it's usually a lot smoother. So it's not like US 30 where it'll just be dead for like 2 seconds and then a third second it just spikes in your stop loss, your TP. So I think for Forex it's not as strict. The only thing that I would be careful for with Forex is news. So just make sure not to trade during news.
Mm-hmm.
But the like dead zone times, it's not as bad. It's not as like complicated for Forex pairs compared to US 30.
Mm-hmm.
Yeah.
So from like for real, I kind of didn't get my the from 12 a.m. to 2 a.m. GJ is fine to trade.
Yeah. I think it should be fine.
Yeah, just US and G whatever GER 40 is to avoid. But yeah, probably should stick to morning session anyway.
Yeah, I would just focus on like one thing and then just master that. Uh,
Yeah.
and it's like for me specifically, like today I made the mistake of trading gold. I think US 30, I should just stick to US 30 and just find different ways of profiting with US 30. Because the better you get at like one asset, you'll start to see the same patterns. For GJ and gold and other pairs, you're going to see different types of movements. But if you just focus on one, you'll start to see that the same pattern just keep repeating itself like over and over again.
Yeah, I start seeing that on the US 30, especially when it's like spikes up, overextended, and it's like always comes down.
Yeah, exactly. If you ever see like a big candle, you could probably expect it to, retrace back up. That'd be a good entry for like a V1 or something, or even a V3 in a lot of cases.
Yeah, I think that's all from me, Sean. Thank you so much again for taking the time.
Yeah, no problem. If you have any other questions, feel free to let me know. I want to make sure you get funded this time. You're almost there.
Yes.
Yeah.
Yeah, I should stick to morning, less than 5 trades.
Yeah.
And
The verification is supposed to be easier, but for some reason, a lot of people do.
I don't know why. Yes, it happened in the first place. This one. It's like, what happened here?
Yeah, like
It's supposed to be easier, 2 months, and it's like not even like in the profit.
Yeah, it looks like you never recovered that one, huh? You just kept it just went down. Yeah, I've noticed that with a lot of people. It's supposed to be easier because you have more time, plus the profit goal is a lot less. I think a lot of people just want to pass right away, so they take more risk on the verification. But if people would just continue to trade the same way they did on the challenge, they could pass. But everyone's different, sooner or later it's going to click where you'll start to realize the mistake.
Yeah, everyone is different, but problems are same.
Yeah, no, exactly.
Over trading, revenge trading, psychology. Yes.
Yeah. Trade psychology is the worst part. It's the thing that really, messes it up for people.
Okay, hopefully, yes.
Yeah, but yeah, no, I just stay more consistent with this verification and take less trades. I think even if you take, just 2 trades a day and your goal is 2,000, you'll make it back into profit, and then you'll slowly, climb your way back. You have a whole 2 months anyway, so no need to rush.
Yeah, I actually, I'm not sure, but yeah, I tried to lower my lot size because we used to do, I mean, you do 10 and I used to do 10 as well.
Mhm.
And then I kind of lowered it to 7.5 or 5. So 30 points are equal to 2000, which is 1%. But yeah, I probably should stick to that because at the end of this one, I started doing 10 less.
Yeah. Once you start to get your confidence back, you start to add more, and it just doesn't work out as you plan. Yeah. I would just, if you want to stick with lower lot sizes, that's fine. It's just going to take longer, but whatever gets you to passing, I think that's the main thing.
Yeah, like you said, focus on wins, not the dollar amount.
Yeah, because if you
since I have 2 months,
you have a lot of time. Yeah, because if you just focus on the wins, eventually, at the end of the week, you're going to have profits.
Okay.
All right. So I think that's it. You have any other questions, or are we good?
No, we're good. Thank you.
Okay, sure. No problem, Alexander. If you have any other questions, feel free to reach out.
Yeah, I will for sure. I'm gonna backtest more.
Yeah, no, definitely. Same here. All right. So
okay, thank you again. See you tomorrow.
Yeah, definitely. See you on
Morning.
tomorrow's live session.